I fully expect that even before the halving, I'm kind of with Adam Beck. I think before the halving we'll probably be at 100. That we're going to kind of march from here to 100. And I think this next run with the approval and the halving taking place, it would not surprise me at all. I mean, Max Kaiser thinks the top's at 220. I think the top could be 3, 4, 500 on this next run.
Mm.
And then in turn, by the way, it'll correct, just as it always does. But if you kind of look at the patterns of the multiples of the bases that it forms, I tend to believe that we're going to go substantially higher than where we are today. And that's probably in a 25-6 scenario. I mean, I'm not sure that happens in 2024. I would guess the average price in 2024 might be in the hundreds somewhere. But then it really starts to ramp higher as more and more people, get involved.
When you start focusing on the technology, what is the technology of Bitcoin? It's peer-to-peer decentralized money. It's that I can own $1 billion worth of an asset in my brain. That's the technology. And when I have that fiat liquidity and I add the technology to it, then what I call I get double happiness. I get the biggest bull market that we've ever seen. Because the global bond market is however many umpteen trillions. If those investors start questioning the premise that bonds are volatility reducing on a portfolio level and that governments can do what it takes to maintain the bond market's purchasing power in energy terms, then holy fuck, like the sky is the limit on where Bitcoin, tech stocks, any of these farmland, Patek Philippe watches, whatever it is that you want to view, it's just going to all go nuts because there's so much money in bonds. If people lose faith in the bond market and this fiat artificial construction that we've created over the last 80 to 100 years, this global economy and how it's been structured, if we lose confidence in that, then the amount of money that's going to be looking for an alternative is going to be something that we've never seen before.
From 2013 till today, my conviction went from I'm pretty lowly, I'm going to buy a little of this in case it works, and I'm pretty lowly convicted that this can really turn into real money, to I'm completely convinced that this is another form of sound money. The odds of technical failure are extremely low, like less than half of 1%. And Bitcoin really does kind of represent digital gold. And in many ways, it's superior to gold because it's easier to store and transfer. The only negative is it has an ongoing energy cost to run the network, but I think it's small enough relative to the total value of the network that it won't be problematic. So, to me, it's a better form of gold. Right now, the issuance rate of the two is about the same. As you're probably aware, in April there'll be a halving, and so the issuance rate of the Bitcoin reward will fall in half. At that point in time, gold on a stock to flow ratio, Bitcoin will be sounder money than gold. And then the other piece of it, the equation I think is important to focus on. I mean, people ask me what can go wrong with Bitcoin. I say that, well, there are two things. One, if it technically blew up, and you got to understand how it works and what it is, and the core developers and the nodes, and there's a lot to learn. But once you learn all of how it works and you realize that we've mined over 800,000 blocks and it hasn't blown up, you start to develop a level of confidence that this thing's probably not going to blow up. It looks pretty good. So that's part one. Part two is it's got to be adopted. I mean, money is just, as Carl Menger said, money is just the most liquid good, right? And so it's what everyone agrees on is money. I mean, we only agree dollars are just a piece of paper with ink on them. We all agree that we know what they are, we know what they look like, we all agree they have value, and we exchange them. The same is true of Bitcoin, right? There are 21 million of them. You can verify them, you know what they are, you control them with a private key, etc. But if nobody gave a shit, it wouldn't be money. So the other metric I watch is adoption. Are more and more people using this shit, and is the value of it going up? And the fact of the matter is, albeit very volatilely, the value going up, but it's going up. And probably more importantly, and I think a better metric to just watch, number of addresses, number of users, number of transactions, number of use cases, number of applications. Those things are all growing very, very rapidly, and that combined, with the technical risk being lower in my mind now than it was in 2013. And with the use cases growing very consistently and rapidly, I'm quite convinced, and with a limited supply, I mean, it'll be a while till we've mined all 21 million because asymptotically we're approaching that number. But with a limited supply, I'm quite convinced that this is going to be the superior form of pristine collateral. It's going to be the best savings money we've ever had. better than gold. Which is not to say that I think the value of gold is going down, because I think given the monetary debasement that's going on, gold's going to go up a lot. Bitcoin's going to go up even more. Is kind of the way I see the two. I think Bitcoin is the fastest horse in the monetary debasement race, and I'm stealing that from Paul Tudor Jones, who's a really fantastic investor, has been very successful. So I think Bitcoin will outperform gold. But if you're 80 years old and you're putting all your wealth into one area, which I would never advise anybody to do, you're looking for a sound money to put your money into, I would recommend gold over Bitcoin, because gold never goes down 80% on a drawdown, and Bitcoin's had 4 of them. So to me, Bitcoin is more your aggressive growth stock, and gold is more your bond. That will give you income and grow it. Income in terms of increased value and protect your purchasing power, but it's not going to go wild to the upside unless we have a monetary reset. But in turn, it's been out there for so long, so many people hold it, it's so hard to produce, etc. That like the biggest annual drawdown we've ever seen in gold was 30%. That was like 1 year. I think, generally speaking, a big drawdown in gold is 15 or 20%. But think about it. If you're older and you've got a lot of money, you don't want to have an 80% drawdown. You've got $10 million and you buy Bitcoin, and Bitcoin goes down 80%, which it has in the past, right? You've lost 80% of your capital. Well, that's pretty devastating. So to me, I'm a risk manager and I'm an investment manager. I've got a lot of older clients, and what we do is we figure out what the right percentage of Bitcoin for them to have is, so that if it goes down 80%, that doesn't change their lifestyle. And then, we put the balance in gold and gold related things. So it's kind of, you're kind of, you say which is better. It's kind of like one's an apple and one's an orange. Do you know what I mean? And they each have different characteristics.
I meant to say, what is better money, not necessarily the price action.
Oh, better money. Oh, Bitcoin's better money. Oh, yeah. Bitcoin's definitely better money, because, look, it's verifiable, it's easier to transfer, it's less cost, it's digital, and we're going to a digital world. Bitcoin will ultimately replace gold. There's no doubt. Gold will just become an industrial and jewelry metal. But it's interesting. All Bitcoiners think that's going to happen tomorrow. And it's not. There's going to be in my opinion, it's not. It's going to take time. But again, Bitcoin will continue to outperform gold. So if you're a very aggressive investor and you can live with the potential drawdowns, if I were in my 30s, I advise all my kids, they've got some savings, I've said, put it all in Bitcoin. You don't need any gold.
Right, but I think
go ahead.
The way Bitcoin is better just because Bitcoin is digital, and the gold's physicality it's itself liability, because you can basically hold gold in some vault, but you're not so sure if your gold is there or not. Maybe they rehypothecated the gold, and
well, that's right. No, that's exactly right. The verifiability of it all is just it's a real mess, and there are all kinds of problems with gold. There have been fake gold. Tungsten is a metal that's very close to the atomic weight of gold, and so in China they found a ton of gold bars that were basically tungsten plated with gold. So yeah, and now there are ways to detect that. And in fact, there are gold dealers here where if you take them a kilo bar, they're going to saw it in half to protect against that risk. Now there are machines that will actually give you a surety that the thing is solid. But the point is that gold's got a lot of problems.
So obviously there's gold. Gold's been around for 10,000 years as a monetary instrument. The problem with gold is it weighs a lot and it's very conspicuous, right? Try hauling around $1 million US worth of gold, someone's going to see that you got that gold, and that's a problem. Versus Bitcoin, I can remember my private key in my head. No one knows how much Bitcoin I have, and no one can prove how much Bitcoin I have. Only I can demonstratively sign a message to say, yes, I control this address that has this amount of Bitcoin at this particular point in time. This is revolutionary, because now we, the people, have a way to save outside of the fiat system and in a way that's non-observable. And so we can say, okay, right. Anyone who recognizes this intractable position that all the governments around the world are in, great, I'm not going to participate in this anymore. I'm not going to keep my money in a bank or just play around in the fiat stock market. I'm going to sell my fiat and purchase a hard monetary asset, and I'm going to keep it myself and exit into this crypto ecosystem, right? And now there's money coming out of the system leaking into another store of value, because we now have a way out. And so if the denominator of amount of fiat in the situation, the numerator is getting this massive number of all this fiat, and the denominator of Bitcoin stays the same. Ethereum is deflationary, and some of the other major tokens or coins, right? It's fixed supply, some of them. Then the price has to go up in fiat terms. Now, does it go up in energy terms? That's another question. But at least in fiat terms, these things mathematically should go up because there's just so much fiat in the world because all this debt has to be printed. No, all this money has to be printed to service this debt. So I think we're at this fortunate situation that we actually have a way out, because if we didn't, then the money's just stuck in the banking system. And essentially what happens is all of a sudden you have a banking holiday and they say, well, you can no longer move your money outside the banking system and you can only buy government bonds. They yield whatever they yield. Tough shit. Well, now we have crypto. We can get out of this situation as ordinary citizens of the world. And so we have all of these promises made, whether it's military or to the old, that are coming due all right now. And the politicians are unwilling to say, you know what? We made those promises back in the day. Things have changed. Therefore, what you thought you were going to get, that's going to be different now and much less, right? We don't have that conversation anywhere in the world. It's, I'm going to be able to make good on the promises made to you, whether that's militarily, whether that's healthcare, whether that's the banking system. And so Bitcoin and gold are starting to say, well, okay, well, these guys aren't serious. We're going to have to make them serious. Either it's, we're not going to own these bonds anymore. Right? So if I am a large bondholder at the margin and I'm hearing the leader of America, the largest, of the American empire say, we can afford all these different wars in all these peripheral locations, and we're not going to fight inflation, like Powell's on pause. Fuck it. I'm not owning this stuff. I want something that actually is going to preserve value. If this is really, truly a wartime, global wartime economy, then I want gold. Now we have this new thing called Bitcoin. I want that too. And we've seen it. I posted a chart, I think yesterday. It was TLT, which is the long-term US Treasury bond ETF, versus Bitcoin. I had one date starting in, I think, February 24th of 2022, when Russia invaded Ukraine. Bitcoin's up something like 50% from that date. Treasuries are, the TLT's down something like 17%. And then from October 7th till the present, Bitcoin's up something like, 24, 25%, whatever it is. Treasuries are down 3%, right? So the standard playbook of shit's going bad, must invest in America because it's the strongest and best in the best financial position, that is breaking down. Now it's, we have these other things. We have this Bitcoin thing. It's a global thing. Everybody can participate. It's not tied to a particular government. It's weightless. It's unobservable. I want that. I want to protect my capital. Let me have some of that. I don't want any of this U.S. Treasury bond nonsense when, U.S. government's going to get themselves into wars all over the world and still make good on the promises to the old people. That's just not sustainable. So we're seeing this narrative starting to shift. We're seeing the correlations start to change. The stock bond correlation has changed. Bonds are no longer this thing that can reduce the overall volatility of a portfolio, which tells you at some point, all these Muppets running these 60-40 portfolios are going to wake up and realize, holy fuck, I own this 40% in bonds. It has not performed. Fucking the US 30-year Treasury is down 50% over the last 3 years. Yet these Muppets are still buying this stuff, right? It's absolutely hilarious. But at some point, their clients are going to stop, giving these idiots money and say, well, wait a minute. You said bonds are supposed to be this sort of anti-fragile asset that's going to protect my portfolio. Why you keep buying these things that are just getting crushed again and again and again as the situation has changed? And that is propelling money at the margin now. And it's just starting, right? Bitcoin's only at 35,000, right? It's still, only half its way to the 70,000 peak. Gold's only at 2,000. It still hasn't taken out some of the highs, and maybe it's close to the highs in 2011. But it's not doing amazing, but it's doing better than owning bonds. And so as people start to realize this and finally get it through their heads that it's changed, the relationships have changed. I need something that's in fixed supply. I need something that is not someone else's liability. Then this movement in Bitcoin and gold and Ethereum and all these other assets, it's just going to collect steam because the global bond market is humongous. If the zeitgeist changes that this is not the best place to put my investors' capital, I need to find something else. It's going to go into my opinion, AI tech stocks and crypto. So there's always going to be the new thing. So if you're, last cycle, it was all these L1 blockchains that were going to be faster than Ethereum and they cater to some particular ecosystem, right? The Solanas, the Aptoses, and all that dog shit, right? And so most of those, you get one shot, right? They had the one massive pump in 2021, and now everyone's like, well, you actually didn't really do very much, and so you're not going to pump again to your all-time high. So I do believe in that sequence of Bitcoin first, then ETH, then everything else.